Well, you heard us touching on the retail sector with Izan, and to help us get a more in-depth view of that sector is Jeanine. She's a retail analyst at Omixa. Jeanine, good to have you with us. Perhaps let's kick off with the overall retail space in South Africa. It's interesting that with Izan a moment ago we touched on players, furniture store players, the likes of Apple, Steinhoff, as well as Lewis, all significantly down today. When you take a look at Shoprite's durable goods or furniture store numbers that were also out today, do you see perhaps some kind of correlation or maybe a lead indicator as to what we could see going forward with regard to furniture sales in South Africa?
No, strangely enough, Shoprite's furniture sales are up, incredibly in fact, about 14% in the second half. It sort of astounds us as to how they could have managed that. I know in the previous half they also far outstripped their competitors, and they did say it was because of mainly the OK Furniture brand, which is a lower end brand and not the House and Home, which competes more with JD Group and Ellerines. But still, even in the lower end, I really wouldn't have expected a 14% growth. So I think that they aren't really giving us an idea of what's happening in the overall market. They're doing something different.
So does this mean that there's hope for whoever might be the pursuer of Ellerines?
I don't think there's hope for whoever pursues Ellerines if they want to continue with a furniture brand, but there is hope after Ellerines, and we're all looking forward to the world where one of the furniture retailers is taken out of the market. And that's really the problem with the industry, is that it's absolutely overtraded. There are far too many stores in South Africa, and they do far too little sales through those stores. I mean, some of the stores have sell about 8,000 Rand per square meter. Now that's not enough to make money. You need to sell close to 20,000 per square meter to make money out of retail. So we're really just waiting for something to happen to Ellerines, which will free up the market for the rest of the players.
So from that perspective, does it mean that more consolidation perhaps needs to take place in our local retail space?
Absolutely, that's what needs to happen.
And if so, who might be
closing up a whole lot of stores?
Which might be more at risk? We know that Ellerines, no doubt, is obviously one that's hot on the charts and underperforming, but some of the other players, Lewis, that's also under investigation, as Izan mentioned, regarding the insurance that they sell to consumers.
Yes, well, they're all going to suffer a little bit with the new insurance laws. We haven't yet seen the finer detail there. We just know the principles of how the regulator's looking at it. But I think that Lewis is actually the one that will stand. We see them as having the better business model of the furniture retailers. And at the moment, in fact, they make more profit out of the current stores they have. So if Ellerines were to disappear, then they will definitely be a beneficiary. And in fact, even though JD Group is struggling right now, if Ellerines were to disappear, they would probably do okay. And as we see it, there's probably a non-furniture retailer who's really looking at doing something with the Ellerines footprint, so Ellerines might very well disappear.
Jeanine, what about the amalgamated players, someone like Massmart?
How are they trading? Well, we've had a fairly good update from Massmart just a few days ago, and in fact they're showing that the general merchandise sales and food sales in fact are trading up. Maybe also a little bit surprising, but then they were coming off a very low base, so it's not, you know, it's a combination of both of those factors.
And then just to close off with Jeanine, is maybe the African story that a lot of analysts are fairly bullish on when it comes to retailers. Does this mean that investors need to position themselves with more African players, or rather those who have operations outside of the South African environment, so that they aren't restricted or limited by growth because of the depressed consumer environment?
I think you will find that investors are doing that. It all depends on what you have to pay for that growth, but definitely the South African consumer doesn't look particularly exciting over the next 5 and maybe even 10 years. It all depends on what happens to labour policy and whether we create jobs here. We really need jobs for the consumer to start behaving better for retailers. And yes, Africa definitely provides that for us, and so will possibly the Woolies deal in Australia, not so much because of growth in Australia, but because of what they can do with that deal.
Let's hope they don't come back with a bloodied nose. But thank you so much to Jeanine. She's a retail analyst at Omixa. No doubt highlighting the fact that we could see more consolidation in that arena.